Well, speaking of QYLD,
You want to get right into
oh,
QYLD?
dude, you made such a good video. So I'm gonna be straight up honest with you, dude. I never invested into QYLD. I also never did. I think as like the quite a. I don't think I looked into it as much as you did. I just always had like a weird feeling about it. People would always ask me, like, when was QYLD really popping? Like 6 months ago, maybe
It's
8 months
still,
ago. Like,
it's make a hate video about it. It's still very popular.
well, I know, but I feel like now is
I might as well have come on the internet and said Andrew Tate is a loser.
I oh man, I feel like a lot of people are starting. Like I'm seeing in like groups and stuff that I'm in, and just through comments, like people in Discords, like people are like I think realizing a little bit.
Well, it was big name people that were really coming and saying that QYLD was a good thing. So I think a lot of people were like, if these guys are saying it's good, maybe I'm missing something. And I
And
think
isn't
I felt like that a little bit for a while. And then like I didn't care enough to read about it, right? It
yeah.
wasn't something I do covered calls. I'm wheeling the crap out of things right now. And I never was like interested in the covered call ETF, but it was so many people asked me about it. So I did the due diligence and I was like,
What is this shit?
I
Yeah.
was like, oh my God, this is terrible. Now
And you're
the
probably
con
making a lot more from your own being you're probably making a lot more active trading selling options than you would be if you would just put the money in QILD, I would think.
Okay. Yeah, no, I said that.
I
I
don't know
said
if
that.
you could
No,
compare it, but
I said that in the video. I said that in the video. I was
yeah.
like, if you learn how to do the wheel, you can use my little book over here that we got. You can use our course. If you know how to do the wheel, you are going to make so much more money wheeling stocks on your own, exponentially more. And you get to pick the companies that are going to appreciate. My biggest gripe with QYLD is how their fanboys and fangirls refuse to acknowledge the fact that since their IPO, they've never gone above that. And people are like, oh, they're up over the last 6 hours. And I'm like, dude, that doesn't mean anything. They are a yo-yo going downstairs, not a yo-yo going upstairs. And then everyone's like, oh, well, I'm not in it for the growth. I'm in it for the income. And the income is really high. I don't care about my principal. I said,
But you're
shit.
still losing money though.
I said, shit, then give me 10 grand and I'll pay you back slowly at 25% yearly. And you can go tell all your friends that you're making 25% yearly. And then when all the money's gone, we'll just say, you weren't in it for,
Yeah.
And if you want, I'll pay you 25% and you can drip 10% back in to make it last longer.
So do you think
Everyone's like, I'm just reinvesting the dividends and getting more shares. I'm like, yeah, you're just getting paid back slower. If you have a depreciating asset, you're just getting paid back slower.
so two things from that. Do you think QILD or the management realizes this and they're just like playing the end game here until they have no more money left?
No, they're going to make changes.
You think so?
Yeah, they're going to. They're going to have to. Let me tell you. You're probably. This isn't an obvious answer, but let me just ask you this. Maybe you know, maybe you don't. Like I said, it's not an obvious answer. What is the number one con of a covered call?
Let me think about this for a second.
Okay.
I'll probably say if the company
Think of it from profit and loss
yeah,
standpoint.
well,
From a profit and loss standpoint.
if the company you own 100 shares in drops so far in value,
That's a good thing. That's a good thing for the call, though. Like when you place a covered call, what's the worst part about that call?
No,
If
I'm not
there's
talking about, I'm saying the share price of the company.
right.
So if you have an average share price of $20 and it drops down to 2, you either have to place covered calls at a loss if you get assigned, or you wait till it comes back up, which could never happen depending on the company. But what's the answer?
Gilly got it. So like, but say like you've already made the call. Like the strike price and the share price is great. when you place that call, in terms of profit and loss, what's the worst part about a covered call? It has limited upside potential. Right?
Oh, you made the profit.
You can only make the profit once.
Yep.
So if it's $10 and you write a call at 12 and it goes to 70, limited upside potential, right? Now your upside potential is dictated by how far in the money or out of the money you go, right? So if it's 10 and you go to 14, you have $400 of upside potential, right?
Yeah.
Writing at the money lowers your upside potential to virtually zero.
Mm-hmm.
If it's trading for $10 and you make it $10.50, the most money you can make is $50 on that. Okay. So when QYLD makes at the money covered calls, okay, number one, when the stock price goes down
on 100% of their holdings, correct? Or almost 100%?
No, 100%.
Okay.
100%. When they make an at the money call and the stock goes down, okay, it expires worthless. Yeah. But the next call they have to write is lower. Right?
Yeah.
So you can have these huge gaps down. So the upside potential is capped for a covered call. The downside potential is zero. It's infinite. It can go to $0. So you can make jumps to the loss side like infinity to zero. But you can only make recoveries at the money. Virtually no recovery at all. And so what happened is their basis keeps going down and they keep writing calls at the money. And then say we have a month that we're up 11% in the markets, right? It tracks the NASDAQ.
They don't get any of that.
Let's say the NASDAQ goes up 11%. Yeah, their covered call makes nothing. Not to mention, as this depreciating asset and the share price continues to go down, what happens to premiums generally when the share price goes down?
Goes down.
Hell yes, they go down.
Yep.
So when you are not making a dividend yield, because half of the donkeys that are investing in QYLD think they're making a dividend, not a distribution.
Oh, shots fired.
You should just read my comment section. When you're not getting a dividend, you're getting a distribution. That means you're getting a portion of all of the premium that is made on that covered call. Well, if the share price keeps going down and the volatility therefore goes down and the premium there goes down, what happens to the money pool of this amazing repayment that they're giving you? So it goes down as well.
Yeah. Let me say something real quick
which is why, let me just finish this last point.
Go ahead.
Which is why their 20-cent average per share, quote, dividend has dropped below 20 cents for the last 3 months in a row.
Yeah.
Because they make 10% losses, right? Every month, the market's gone down 5%. So they're making 5% losses as far as like their basis. And then when they want to try and make a jump back up, they can't make that same 10% jump because they write at the money with 100% of their funds. They have to change. They will. It's going to be around. It's going to be around in 20 years, and people are going to come back to that video and be like, "Oh, I thought you said it was a sinking ship," and they're not going to realize that they had to change and reformat everything they had to do to stay alive. And I mentioned that in the video as well. Yeah.
So because I know a little bit of New York Brad came out because of probably your comment section blowing up, so I could tell there was some PTSD there. It's just
uneducation.
Well, that's the point I'm making though, real quick, Brad, is this proves a point. As Warren Buffett, Charlie Munger, the greats have always said, if you don't fully understand what you're getting into and what you're putting your money into, you do not need to invest in it. And that's why I never invested in QYLD. I just didn't really, I knew it was a covered call ETF and
it's going to go up because it's a vehicle that has limited capped upside potential. Like when you say that to yourself, how can you believe it?
Yeah.
Because they don't know how the share price goes up or down, and they don't know how the distribution goes up and down. They just say, oh, for the last 6 months, since my buddy told me at the fall soccer game that I should invest in this awesome income vehicle and it pays me 10% per month. They never asked any questions. And neither did I, because I didn't care. Like you said, I didn't care. But then I realized what a disservice it was doing to people. It's a run for me.
So
Run. It's a like dip. I'm out.
if
See you
you were
later.
running QYLD, what would you change about it? Like to still get the high dividend yield for like the premium you earn. Like I don't know if that's a loaded question or if it's too much,
No,
but
no. And I want to say this too. Like, I know what I'm about to say is being done with other covered call ETFs, but I don't know enough about those yet to speak about them. So you probably know what I'm talking. I don't want to say any other covered call ETFs. I know they exist. Okay.
Yeah.
The easiest thing for them to do, number one, is not risk 100% of their portfolio fund every single time. What does that do, Brad? What that does is allows you to make at the money. Because I agree, at the money calls are easy to make, especially if it's above your basis. Okay. You get the most premium at the money. That's why they do it. Okay. But like I mentioned, you can't get that upside potential. So if they used 50, I bet you they can still slay if they did 25. Okay. If they did 50% of their fund, well, then what's going to happen is the covered call, when it goes up 10% or 3% in a month, because these are all monthlies, they don't do weeklies, these are all monthlies. And when it goes up, you get that limited upside potential on the calls that you made to collect premium. Awesome. That's why we sell covered calls. But then the other 50% can acknowledge and gain all of that other huge growth that happened in the share price, you know? And the same is true on the downside as well, right? You are essentially going to be dollar cost average. If everything is not tied up, like this is rule number one of everything. Diversify a little bit. You know, it's rule number one. Don't put all your eggs in one basket. I know Elon says unless you protect that basket really well. But it's like the hugest red flag when I was reading like how they're structured, forget the at the money calls, forget the fact that they liquidate it at expiration, forget all these other stupid things. When you read that they are risking 100% of their portfolio every single month in a bear market that keeps diving into what some people call the recession, everybody but the White House, and you think with this limited upside potential that it's going to rebound, like, yikes. But if they did change it and they changed that, I think that's the easiest way. The buck can stop there. We don't need to change that much. Because we haven't even gotten to the fact of the extreme expense ratio that you're paying when you have them as well. So not only are they paying you back your own money slowly, not only are they a depreciating asset, I know trolls in the comments, they're up over the last month. Great job. I'm thinking the long term, like it's not gonna go well. You made a bold statement about SoFi. I'll make a bold statement about QYLD, possibly even bolder. In the words of the Game of Thrones, I think they will not last the winter if they don't change. You are going to see, and people change, funds change, right? Banks change interest rates monthly. People change. I'm not going to hate on them if they change. I think they should if they want to survive. If they change, I'll change my opinion, right? But I don't think.
Ooh, that'd be a good video.
I don't think we'll call it a true winter. February 2023. If they do not change the structure of how they generate income for their investors, they won't. It's going to be. It'll be a $10 stock.
What if the market starts popping again though, and they just keep?
But Jay, with that limited upside potential, it has to pop every single month for a year.
Yeah. Because what if it does though?
No, you have to. No, look at this. They track the NASDAQ, okay? And I forget what video I was watching. It might have been Mikey Millions, Kamikaze Cash. I think it was him. If it's not, I apologize. It was either him or Average Joe Investor. They showed COVID lows for QYLD, right? And then they showed the whole track up until today, all right? And then they overlapped the NASDAQ. QYLD is at levels that are below where they fell during COVID. where the same kind of shape is in the NASDAQ, but it's well above their COVID lows. So during the time from COVID until January,
But is
right?
that price or is that dividend adjusted?
Share price, dividend adjusted.
Well, which one?
No,
it's two different things.
With dividends reinvested.
Oh, okay. All right.
So during this uptime, well, because what happens to the dividend yield as the share price goes up?
Goes down.
Right. So they've pretty much been at 20 cents per share forever. Right. So while we were bulling out of that little quick COVID bump, the NASDAQ soared, and it soared so high that even with these pullbacks now, it's still not even that low. Where QYLD during that same time went up a little bit, yeah, but then came down even harder because then all the bases are thrown off. I just they have to change by February, or it's going to be a $10 share price.
The man has spoken.
I think even if the market comes back and we even break even on this year, 0% return for the year on all the indexes, I can't see it. Like, what's it going to trade for?
Well,
it's trading like.
Let me ask you this.
It does make me pretty angry. Josh Everett said QYLD is the whole life insurance of the stock market. Gilly said, Brad's going to get another voicemail after this. Who's going to call me? I don't even know who this person is. They keep putting in my...
Imagine QYLD calls you now.
Yeah, right.
Global shares.
Global shares. Could you stop teaching people about the covered call, please, Brad? This is disheartening. This is terrible.
Oh, man.
And the thing is, too, the other ones that we hear about that I have not done my research, so we're not going to mention them, even though they're coming up in the comment section. They're doing better than QYLD. Like, who at QYLD is like, or maybe they just think that they have enough people that believe in it that they can just ride this thing down. I don't.
Well, that was going to be.
Do they want to make money? I don't get it.
That was going to be my question too. Is don't you? I mean, these guys at QYLD, I want to say they got to be smarter than us. You know what I mean? So like,
no, they have degrees. Yeah,
they have to understand what they're doing. Like maybe there's something like coming up that they're like, they just don't know yet, or I don't know.
I think it comes down to like, what's the biggest problem about quote financial advisors or like hedge fund managers or people that are trying to beat the market? They still have like a business to run, and all they need to do is beat the market short term because it's always going to go up and down. Like they don't need to think about long term. And I think that's QYLD, who's ever like running that. It's all bots. It's all algorithms. It's all this. It's all that. There's no thought process going into it. At the end of the day, they're like, are we making money? The answer is yes. They're charging a 0.6 expense ratio. They're making money. They don't have to worry. There's nothing at stake for them. That QYLD could go to 0 tomorrow, and that doesn't really affect them that much.